Every year, the Financial Times and Equilar, the research firm, take a look at bank CEOs and who is paid the most. This year, as has been true for 3 of the last 5 years, the winner in the big pay sweepstakes goes to Jamie Dimon of JPMorgan. Matthew Vincent's here with me to talk about what else was interesting in the survey.
Yeah, I mean, the thing that struck me is the widening gulf between the US bank chief executives and those in Europe. You know, the Atlantic is pretty wide, but now the pay differential is getting quite wide. On average, a US chief exec will get about 20 million a year. For Europeans, it's nearer 11. But then we have these huge outliers. We've got Jamie Dimon, $27 million total pay. James Gorman, 23. Poor old Ross McEwen, RBS, has to get by on just 7. I mean, how can he manage?
Is there a reason for that big difference?
Yes, I think shareholders will immediately say, look at the return on equity achieved by these banks. In the case of the American banks, it's more than 7%. In the case of the European banks in this study, just 2.9. So the chief executives have got to take credit for achieving these returns. You know, look at return on equity versus cost of equity, and you've got to pay them more.
But really, does anybody need to make, what is it, 27 million versus 7 million? Certainly 7 million is enough for any banker anywhere.
Yeah, you could argue that they haven't exactly, covered themselves in glory over the past few years when we've been doing this study with Equilar, and yet their pay seems to be creeping up. Jamie Dimon, more than 100% increase in total pay in the last year.
And of course, that increase reflects the fact that the year before, for 2013, was the year he had his pay cut because they had screwed up and lost all that money with the London whale trading scandal. So I guess you do see Jamie Dimon's rising and falling on the system does show that there is at least some relationship between what the bank does and what the CEO does. But it still seems all a bit uncontained and completely out of control.
Yeah, well, I suppose shareholders are beginning to feel a little bit uncomfortable with that, because we've seen JPMorgan shareholders, well, while not really sort of protesting in huge numbers, have certainly expressed certain disquiet about some of Jamie Dimon's pay arrangements.
That is true. Actually, 40% of the shareholders voted against his pay in this last shareholder meeting. Now, to be fair, it wasn't the number they disagreed with. They did not like the fact that he was getting cash with no actual targets. They thought, you can't pay him just for the glory of being Jamie Dimon. He actually ought to be trying to achieve something.
Yeah, I think that also came out quite strongly from this analysis. Some of the commentators, some of the academics have been talking about alignment of performance with pay, and it's not it's not uniform. It isn't always happening with all of these banks.
Do we think there's a trend going? Will the numbers come back together, or will we see the US and Europe continue to diverge?
Well, some people say that the reason why Europe has fallen behind, if you can call so many million dollars or pounds falling behind, partly political, because obviously in the UK nobody could get away with paying the chief executive of RBS or Lloyd's a vast amount of money, while the government is still supporting these banks with its stake. So once that changes, once the government has sold down the stake, you could argue that we'll get more sort of commercial marketplace type pay awards. So perhaps Ross can look forward to a little bit more money in future.
One could certainly imagine that. I suppose the other thing that hangs over Europe is CRD4, which is the pay rules that were passed out of Brussels that limit the ability to pay bonuses and share awards that are more than twice the salary. And there are, salary numbers, even for the Americans, are relatively low, and that's partly for tax reasons, that U.S. tax rules penalize large salaries, large being larger than $1 million. And so the U.S., you'll see, a relatively controlled salary and an absolutely killer bonus. That's obviously not possible in Europe.
That's true. That's another factor. And similarly, one of the things I didn't really realise, which came out in some of the analysis of these numbers, is that the bonus clawback measures, which have just been proposed in the UK, clawing back up to 10 years worth of bonuses, is cited as a reason why chief execs should be paid more, because there's a danger they might have to lose some if they're found guilty of poor risk management or misconduct. With strange arguments, but it was put forward.
You can see that. I might end up having to give some of it back, so I need to spend a lot of it now.
Yes, exactly. And spend it on things that can't be taken back later.
Well, we'll have to see how that plays out, because they just proposed those rules, and so maybe it'll show up in next year's data. Well, thank you very much, Matthew. If you'd like to learn more about bankers and their pay, have a look at our interactive, which is available on FT.com.